What's up, Bitcoin Bulletin fam? Get ready for a rapid-fire rundown of the news that's moving markets and making waves. First up, we're talking about the insane dependence of a major Bitcoin stock on the king of crypto itself. Think MicroStrategy and its colossal Bitcoin holdings. How much of its value is truly tied to BTC's price swings? We're breaking down the risk and the reward. Next, we're diving deep into the volatile world of Bitcoin trading. The price has been on a roller coaster, retreating after a brief rebound. What's causing these wild swings? We'll look at the impact of forced sell-offs, thin market liquidity, and the crucial economic data that the Federal Reserve is watching like a hawk. Will these factors push Bitcoin down or send it soaring? Then, we hit a critical crossroads for Bitcoin this week. We've got a massive quarterly options expiry colliding with a key U.S. inflation reading, and the stakes couldn't be higher. Greg Magadini is here to explain how dealer positioning and short gamma could trigger massive price moves, potentially sending Bitcoin to $96,000 or even higher. This is where the real action is happening. And finally, a game changer in the ETF space. 7RCC is launching the Bitcoin Carbon Credit ETF, a product designed to give you Bitcoin exposure while investing in carbon credits. Is this the future of sustainable crypto investing or a potential greenwashing nightmare? We've got all the details. Stick around for all this and more on Bitcoin Bulletin. Don't forget to like, subscribe, and hit that notification bell. Bitcoin's secret weapon or Achilles heel. Some of the hottest ways to invest in Bitcoin aren't actually buying Bitcoin at all. Instead, savvy investors are piling into companies that hold massive amounts of BTC on their balance sheets, with MicroStrategy and Marathon Digital Holdings leading the pack. These companies have seen explosive growth, with MicroStrategy, the pioneer of this strategy, delivering a staggering 1,650% return over the last 3 years, far outpacing Bitcoin's own impressive 522% gain. But here's the catch. Their value is intrinsically linked to Bitcoin's price. When Bitcoin crashes, and we know it tends to do that every few years, these companies can tumble with it. Consider MicroStrategy. They're sitting on a mountain of 639,835 BTC, currently worth a staggering $72 billion. With a market cap of $98 billion, that means Bitcoin makes up nearly 3/4 of their entire company's value. Marathon Digital Holdings is even more extreme, holding 52,477 BTC valued at around $6 billion against a market cap of $7 billion. This heavy concentration creates significant risk. However, companies like Cipher Mining are taking a different approach, selling Bitcoin regularly rather than just accumulating it. While they hold far less Bitcoin, their diversified strategy makes them less volatile. This stark difference in strategy is sparking debate among investors. Is it smarter to bet on the pure Bitcoin treasury model, like MicroStrategy, or opt for a more balanced approach like Cipher Mining? The market is watching closely to see which strategy will ultimately prove more resilient in the face of Bitcoin's notorious price swings. Don't go anywhere, because the market's next move could be decided by forces you've never heard of. Next, we're breaking down why Bitcoin is suddenly struggling to hold its ground, and it all comes down to a massive options expiry. Bitcoin's price plunge, what's really going on? Bitcoin took a sharp dive yesterday, erasing a short-lived rebound and leaving investors wondering what's next. The world's largest cryptocurrency, by market cap, dipped below $112,000, a stark reminder of its inherent volatility. This isn't just a random dip. It follows a wave of forced liquidations earlier this week that wiped out around $1.5 billion across crypto exchanges as traders who had borrowed heavily to bet on Bitcoin's rise were caught off guard. The situation was amplified by thin market liquidity and aggressive speculative bets, sending Bitcoin tumbling from above $115,000 to the low $112,000 in just 24 hours. Adding to the uncertainty is the Federal Reserve's cautious stance on interest rates. Fed Chair Jerome Powell has warned of a no-risk-free path, and other officials are emphasizing a data-dependent approach, which is dampening investor appetite for riskier assets like Bitcoin. Traders are now eagerly awaiting key U.S. economic indicators, including jobless claims and the final Q2 GDP reading, followed by the crucial PCE price index on Friday. These numbers could significantly shape the Fed's next move. The broader crypto market is also feeling the heat. Ethereum, Solana, Cardano, and Polygon have all seen significant drops. Even meme coins like Dogecoin are weaker. While XRP has held relatively steady, the overall sentiment is cautious. Timothy Messer from BRN notes that sticky inflation risks and resilient consumer demand are key factors. He also points to China's move toward de-dollarization, which could impact crypto's role as a global asset. Meanwhile, Bitcoin ETF saw a $241 million inflow on Wednesday, a positive sign, but Ethereum ETFs continue to face outflows. On-chain signals remain fragile, with Bitcoin trading below a historically significant level, making it vulnerable to further downside toward the $105,000.90,000 range if key support fails. Messer warns that the battleground is the $111, $115, $113, $500 band, and losing these levels could accelerate the downside momentum. The market is holding its breath, waiting for the next economic signal. But what if the biggest threat to Bitcoin's price isn't just economic data, but a massive financial event happening right now? Get ready, because we're diving into the critical options expiry that could send Bitcoin into a tailspin or launch it to new heights. Bitcoin at a breaking point, options expiry meets inflation fear. This week is make or break for Bitcoin, as a massive $22.3 billion in crypto options are set to expire, coinciding with a crucial U.S. inflation report. This convergence is poised to dictate whether Bitcoin's recent rally continues or fizzles out. The sheer scale of this options expiry is unprecedented, with Bitcoin options alone accounting for a staggering $17.06 billion, according to Deribit. Greg Magadini, director of derivatives at Amberdata, calls this the largest on the board and highlights critical dealer positioning. A lot of short gamma at $109,000 and $108,000 means that if Bitcoin dips below these levels, dealers could be forced to sell aggressively, triggering a sharp downward spiral. This isn't just theoretical. A failure to hold above $108,000 could ignite an automated selling cascade, independent of the upcoming August core PCE inflation release. Magadini warns that a drop below this level, especially in a weak market, could trigger a 2 standard deviation move to $96,000. Bitcoin is currently trading precariously around $109,100, having already shed 6.5% over the past week. All eyes are on the core PCE release, with forecasts suggesting a slight decrease in month-over-month inflation, but any hotter-than-expected number could strengthen the dollar and deepen Bitcoin's correction. However, there's a flip side. Maja Vujanovic of FG Nexus suggests a softer PCE reading could create a pin from options expiry that might allow for a sharp upside move. Both Vujanovic and Magadini anticipate a constructive fourth quarter for crypto, driven by ETF demand and improving liquidity despite short-term volatility. Magadini even predicts Bitcoin could soar past $250,000 if the Fed stops fighting inflation. Options data also shows strong bullish sentiment, with significant buying of year-end call options at $120,000 and $140,000 strikes, hinting at long-term optimism despite the immediate uncertainty. Can Bitcoin really go green? We're about to find out. Next, we're exploring a groundbreaking ETF that's trying to merge Bitcoin's potential with environmental responsibility. Can Bitcoin go green? The new ETF betting on carbon credits. In a move that could redefine sustainable investing, 7RCC has launched the Bitcoin Carbon Credit ETF, an innovative product designed to offer investors exposure to Bitcoin while simultaneously investing in carbon credits. The core idea is to harness the potential returns of cryptocurrency investments while actively addressing the environmental concerns surrounding Bitcoin mining, which is notoriously energy-intensive and contributes to a significant carbon footprint. This fusion aims to appeal to a growing market segment of investors who are seeking greener, more responsible investment options. This ETF offers several compelling benefits. Firstly, It directly channels investment into carbon credits, actively supporting initiatives that reduce greenhouse gas emissions. Secondly, it provides diversification opportunities by allowing investors to benefit from Bitcoin's potential growth alongside the increasingly critical carbon credit market. The structure is also designed to attract institutional investors who are placing a strong emphasis on environmental, social, and governance (ESG) factors. For individuals looking for exposure to both Bitcoin and carbon credits without the hassle of direct ownership, this ETF simplifies the process significantly. However, this innovation isn't without its challenges. The U.S. SEC will face regulatory hurdles in approving the fund's structure, custody, and valuation methods, especially given the unique combination of assets. Both Bitcoin and carbon credit markets are known for their price fluctuations, which could impact the ETF's performance. Managing two distinct and volatile asset classes within a single fund presents complex operational logistics. Furthermore, there are concerns about potential greenwashing. Whether the carbon credits will genuinely offset Bitcoin's environmental impact or if it's merely a marketing tactic. Critics point out that the credits might not fully compensate for the carbon emissions from fossil fuel-intensive mining operations. To mitigate volatility, the ETF plans to allocate approximately 80% to Bitcoin and 20% to carbon credits, aiming to soften the impact of Bitcoin's sharp price swings with the steadier performance of carbon credits. Whether this hybrid model gains SEC approval and proves to be a truly sustainable investment will be closely watched by the market. That's all the news for today, but don't go anywhere. We're about to wrap it all up with a lightning round recap and our full call to action. And that's a wrap on Bitcoin Bulletin. We saw how MicroStrategy's massive Bitcoin holdings create both huge opportunities and significant risks. Bitcoin faced a critical test with a massive options expiry clashing with inflation data, creating major volatility. Plus, 7RCC is launching a new ETF that tries to make Bitcoin investing greener by combining it with carbon credits. What an episode! If you found this information valuable, smash that like button, subscribe to Bitcoin Bulletin for all your crypto updates, hit the notification bell so you never miss a show, and follow us on all our social channels to join the conversation. We'll see you next time.